Are you selling in Ireland? Here's what you need to know about the Irish VAT rules. Hi, I'm Richard Kupchak, co-founder and CEO of Safari Star. And in this video, we'll be looking at the key VAT requirements in Ireland. When VAT was introduced, who needs to register, the standard rates, the registration process, and the risks for non-compliance. Ireland introduced VAT back in 1972 in preparation for joining European Economic Community. The standard VAT rate is 23%. A 13.5% reduced rate applies to services such as construction, energy and tourism, and a 9% rate applies to hospitality and certain goods. There is a 4.8% super reduced rate which applies to agriculture. Some goods such as children's clothing and food may qualify for 0% VAT. Irish businesses must register if their taxable turnover exceeds either €75,000 per year for goods or €37,500 per year for services. EU businesses selling to Irish consumers must register if they exceed the €10,000 EU-wide distance selling threshold. For non-EU businesses, storing or selling goods in Ireland must register immediately as there is no threshold. Non-EU businesses are not required to appoint a fiscal representative in Ireland. However, many appoint a local tax agent or an accountant to assist with VAT compliance. To register, you will typically need to provide your company incorporation documents, proof of your trade activity like contracts, invoices or marketplace agreements, and the identification of your directors or business owners. Registration is done through the Irish Revenue Commissioners and usually takes 2 to 4 weeks. Once approved, you'll receive an Irish VAT number. VAT returns are generally filed bi-monthly, so every 2 months. Some businesses may qualify for quarterly or half-yearly or annual filing, depending on their turnover and VAT liability. Returns are submitted electronically through the Revenue online services. Failure to register or late registration can result in backdated VAT liabilities, penalties, and interest. Penalties for late filing or payment can include fixed fines plus interest charges. Persistent non-compliance may result in restrictions on doing business in Ireland. So to recap, Ireland applies VAT at a standard rate of 23% with multiple reduced rates. Local businesses have thresholds of €75,000 for goods and €37,500 for services. EU sellers must monitor the 10,000 distance seller threshold, and non-EU sellers must register immediately if storing or selling goods in Ireland. Compliance requires bi-monthly or alternative VAT filings via the ROS system. Thank you for watching this video. If you found the content useful, let me know in the comments. Don't forget to like, subscribe for more updates on VAT and international compliance.